Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning here. I am not ready. Hold on. Okay, lights. All right, there was the numbers just now. GDP in line, 1.3%. Initial jobless claims higher than expected, 219 versus 217. PCE prices advanced 3.6. So that's a little bit more upside than I would have expected off of that news, but no difference. And it's really just kind of a small retracement of what we were retracing yesterday, right? So let's come to the charts. Have some rollovers. So here's yesterday, pretty decent downside continuation of the move from before, but we are, it looks like we may actually completely retrace that, actually. S&P 500 just, oh man, even down even further overnight. Yesterday, you know, like during our session, it kind of like oh, maybe they'll eke something out today, but nope. Sell into the close. Oil, still kind of struggling there a little bit. Gold and silver. Oh, that's interesting. There's kind of a little bit of a divergence between gold and silver today. Kappa is not doing well, going down, and the Japanese yen being saved from the doldrums. So was there more intervention last night? I don't know, but that level down there was not looking good. And last, and certainly least, Bitcoin still below 69,000. All right, guys. Well, I'm not feeling too good. I did not have a good night's rest. And Samsung decided to try and sabotage me again by updating my phone in the middle of the night so that my alarm wouldn't go off in the morning. But my internal clock got me up at almost exactly the right time, and I think that we were generally okay. So that's fine. But yeah, I was tossing and turning. I woke up a lot of times last night. I'm not very happy. So we'll be careful if I don't think that I'll take live trades. We might mess with it, but I don't know if I'll take live trades. The flows coming off of this news actually look quite mixed, so I'm a little bit weary about messing with this because it's probably gonna wiggle around a lot. I don't know if that news that we just got is really that good for the treasuries and the rest of the market, right? But for now, they are on the upside. Let's come in and do our notes. Okay, so flows, we've got GDP second estimate in line, jobless claims more than expected, the PCE lighter than expected, and let's see here. I think we got some more stuff today, don't we? Okay, we get pending home sales at 10 o'clock Eastern time. I don't see any Fed speakers on here, at least not until much later. Okay. Fed speakers after stream. Get a lot of Japan numbers tonight. Lots of Japan numbers tonight. JPY possible overnight intervention. Having it from downside. That's a big factor. Okay, so after all of that, I'd say the liquidity looks pretty healthy after the news. I think that, okay, so GDP, jobless claims, PCE together, those are all mildly to the upside. No auctions today, so that kind of gives us a reprieve. Let's put that in here. No auctions today, so reprieve from sell pressure that was coming from that. And the Japanese yen is pushing too. So I think everything is in line to be mildly upside. Flows mildly. What should I say? Imbalanced towards upside treasuries. Let's add with lots of volatility. I'm expecting there to be decent amounts of volatility. So that means that we can take longs, but I need to be a little bit more careful than usual about the spot that I pick. Me not feeling very good though. So yesterday I was, had a pretty heavy day in the weightlifting, and I'm not happy with my results. I think I got some form issues to sort out, but I think I know what I'm doing wrong there. And I don't know if I really got like all of the energy out of me, like I was twitching in my sleep, and I was very unhappy going to bed last night. So yeah, I don't know if I'll be good on trading today. You know what else though is that I feel so unfocused. Like, one of the things I was thinking about was we've been messing with this market imbalance indicator. Of the indicators that I've made, I think that it's the one that shows the most promise. Even before Uzi started picking it up again, that was the one that, like, when I was backtesting and everything kind of looked good until I decided that the backtesting was just not accurate enough for our purposes. For that short of a time frame that we had to do it on. I think that when I was running it, now that I think back on it, I think I was running it on relatively large time frames, but I think I was running it on like a 5-second chart. Like it was a 5-second chart. So that was really, really short. Back test results I was getting from it, maybe not accurate enough. So I kind of messed with it. I decided that, and then I kind of dropped it. And I think me being ADHD, it's like it loses its novelty and then it's not interesting anymore and I forget it. You know what I mean? So there's been a couple of projects that we needed to do that I got out of the way. And now I'm not really moving on to the next one. So this right here, we did the candlestick. Now, somebody wanted me to do the Ninja Trader Sprock connection. So basically, you can be running stuff over in Python, and then Python can send messages to Ninja Trader through a Sprock, and then Ninja Trader will carry out actions through that Sprock. And I already kind of had the basics of that set up, so I think I have enough for them to do that. But they kind of want help. They don't feel very confident about it, so maybe we could mess with that. So I feel like some of this is, so here's this Mateo imbalance. That's one that I could do. What I really need here is video ideas right here. This transcription robot, we don't need that anymore. Back testing and indicators. So that is this. I think that the avoid news algo probably goes at the top. Now, the reason I haven't been doing that one is I don't have a source. Hey, so I just started watching YouTube and I'm learning so much. Oh, thank you very much. I'm glad that you find the content useful. Are you living off of trading? Absolutely not. That sounds like a nightmare to me. I would not recommend trying to make a full-time living off of day trading futures. It's extremely inconsistent income. There's lots of challenges associated with it. I have a day job. It's a pretty well-paying day job, and I intend on keeping that day job. Even if the YouTube channel used to be like, oh, I would like to, I would really like things to pop off so I could just, live off of the trading in the YouTube channel and, focus only on that. But I've kind of shifted since then. I'm kind of like, nah, you know what? I want to be doing a programming of some sort. So like if something like that happened and I needed to quit the day job to spend more time making YouTube content, I would also spend more time on our indicators in our software. Like maybe I would take that as an opportunity to start making my own platform or something like that, right? But not never trying to make my soul living off of day trading. Or frankly, my soul living off of YouTube either. That's the other thing that's kind of changed for me, is I've kind of realized that, yeah, you can make tons of money off of YouTube channels, but all of the people that I see that have really successful YouTube channels, they kind of, they're not entirely happy about it. It like almost becomes a chain. Like you're a slave to the algorithm, and I don't want to be that, so probably always want to have something else. But the thing that I would say is that I want you to look at the content and judge the content that I put out on the merits of the empirical evidence that backs that content, and not based on how well you think I might be doing or any of that sort of stuff. So I think a lot of people come in with this like, well, if I want to learn from somebody, I really should pick somebody that's like really doing what I want to do, which is make a living off of it. Well, first of all, you're crazy if that's what you want. But second of all, a lot of the people that get that far are just lucky, frankly, and don't really know anything. That's why I say, like, the only reliable thing, how do you decide who you're going to pay attention to, what's correct and what's not correct, and so forth? The only reliable indication that you can get in the day trading space, at least, is the empirical evidence. Any other area, you want to become an esports champion, go find the best esports player of that thing and watch the videos that they're putting out. That's probably a good way to go, right? But when it comes to trading, there's so much randomness in the markets. There's so many ways that you can kind of generate temporary success and so forth. The only thing that you can really rely upon is empirical evidence. And so that's what I would say, is because every video that I show you, I try and give you the information about like where I got these ideas from, where the evidence for it is, and so forth. So look for the empirical evidence. Okay, let's see here. Only cache live data. Oh, that's a good. That's interesting. I don't remember anything about that, but that is something that maybe I should do. Okay, this is the big one. This is the one that's like, you know, I'm kind of putting off on doing, but I should be able to do now. And then I'm gonna make a new category for this for CTA. There we go. Bingo will be an inside day. That's interesting. I mean, how come I closed out of that? My dissection of the flows is mildly balanced towards the upside, but that was mostly because of the news, and it kind of seems like we're already kind of through a lot of that. So, and since then, it's just kind of been flat. So I kind of, that first bit of action just makes me really uninterested in, it just makes me really uninterested in any kind of trade today. A basic momentum strategy with Norgate data. That's the big thing. Okay. Now, some of these other ones, they maybe are actually indicators, but like they're kind of this sizing positions. You know what? Read books. News. Backtesting cached data. The left or right game, that's one that we could do. I think on that one I kind of would have to decide like which stack I would like to use, and I'm not entirely sure what stack I would like to use for something like that right now. I kind of feel like that React isn't cool enough anymore. Understandable, because I'm starting on computer science after the summer, doing training on the site as well. Well, there you go. Yeah. You know, if you are, you know, going to university, maybe you can focus on areas that I wish I had focused more on, like machine learning and statistics and that sort of stuff. I tell you what, I've got this book about machine learning, and a lot of the first half of the book or so really kind of goes into the models behind how these work and how like Bayesian logic has kind of led to these sorts of machine learning networks. And so much of it is over my head, man. So much of it is over my head. I really would have needed to be doing it at school. Really, truly understand some of this stuff. I never found a book for this, but I need to find a book too. Okay, and these are all kind of like possible areas of investigation. This one, even though it's not a video, let's say video / channel ideas.
Block
So,
by.
when I go down through this is where I'm like, I'm unfocused. There's so many things to do, and which one should I really be doing? I think that the most important one would be backtesting on cached data. Okay, so first question. does. The market order imbalance. Cash. Does not. Oh yes, and this is the one that I had to do all sorts of funky stuff for. Like, it should be able to backtest it, just not... I don't know. Should we try it? Or would that be unfocused? What's your favorite? I place most of my trades in the micro treasuries right now. Because, you know, it's small and I want to minimize the amount of risk that I'm taking on. I'm not out there to hit big right now. Maybe in a few years, things calm down. Right now, like, honestly, right now in my life, so I had kids. The youngest is now 2. So that's a little bit better because, you know, he's not quite so dependent on you for everything. But you still have to watch him really, really carefully because his older brother, who is 4 and is autistic, is constantly doing things that would hurt him. So when I'm, you know, outside of the trading, I can't really gain enough focus time to actually, like, program things, right? I wouldn't say that I have my eye on them 100% of the time, but it's kind of like you can idly browse your phone while you're watching the kids, and, like, that's it. You know, and then on top of that, you have all these problems like getting them to go to sleep and wake up at a consistent time every day for some reason has been really hard. I don't think that my wife has done a very good job at that, and it very, very frustrates me. You constantly having to clean up all of these sorts of things. So, like, when you're spending all of that energy and not being able to do everything that you want to do, that makes it really, really hard to then come in here and risk hundreds of dollars a day, you know? So I just trade the smallest that I can. I trade one micro contract, and maybe I make or lose $10, and hey, that's perfectly fine. Like, if I'm paying, I didn't pay for, well, did I in April? I'm not entirely sure, but I don't think I traded a whole lot in April. I don't think that I paid for the data fees. But what you gonna do? I'm just getting into the futures coming from options and crypto. Oh, well, you know, I think that the really big change with futures, especially when you've got the DOM in here, right, is that I can get in and out really easily, right? Like a lot of platforms, if you want to buy something, it's like, okay, I want to buy it, opens up an order ticket. How many shares do you want to trade? You have to calculate based on different things, how many shares you want to trade. Tell it if it's a buyer share, buy or sell. Type in what price it is, and then you submit your ticket, right? Whereas when I'm in the futures here, I just click. I just, you know, click a bunch of those are placing orders, you know? Those are sim orders, but, you know, it's placing orders. It's placing stops. If I go like that, that's placing a stop. And that's it. And I can place any kind of order that I want within 2 clicks, right? So that allows you to be extremely nimble and manage your risk extremely tight. And you can't really do that in other instruments, especially not options, right? Because options are extremely illiquid. And when it comes to options, it's basically like if you have if you try and put a limit order out in options to like to like write an option, you know, the chances of you getting filled are like, if you get filled, you probably didn't want it. Like, it's only going to happen on like a really strong adverse move against you where the price that you're putting up is like really dumb, you know? So in options, you almost always end up using market orders to take your positions on. And then that's like, geez, right? And then when you want to get out, you are at the mercy of whatever the spread on that option is, right? So you can totally have situations where like the instrument does exactly what you want it to do, and you hardly make anything because it doesn't move enough to account for the spread that you had to pay each side, right? Well, those are kind of some of the challenges. Whereas, again, in the treasuries, you just click in and you click out. So treasuries, or sorry, not treasuries, but just futures in general, are really, really good for trading like live fluid situations, like news releases, economic releases, when the market's moving really fast, those sorts of things. That's, I think, kind of where the difference comes in. It's kind of funny because people will tell you, well, futures are a little bit more technical oriented. So you see a lot of people, they come into trading futures because they think that they're based more, that you utilize technical analysis for them more. But what they're not telling, or what they don't realize, is that the reason why the futures are considered more technically oriented is because momentum strategies work really well on futures. But momentum strategies are like a long-term strategy, like something that you run on daily bars. This is not a day trading strategy. So if you're coming in and you're day trading, trying to use those sorts of things is just not very effective, right? So I really think that if you're going to trade futures, that you've got to be very focused on like what's going on in the market, being really informed, really knowing like everything about what's going on. Happy to have found your channel. I want to know how the other interest rate products relate to the UB. Sure. So first of all, I don't recommend trading UB just because it's like so whippy. I've seen a lot of people that come in and they seem to be having a lot of success with UB at first, and then like they slowly fall to death by 1,000 cuts because it's so volatile relative to the other ones. So why is that? Well, the way that this works is these are actual deliverable futures. Okay, so when I'm buying ZN, I am, basically taking on a contract to, at a certain date, buy a 10-year treasury. Except for the thing is there's lots of 10-year treasuries, right? Like the treasury is auctioning new treasuries out every week, every week now. So what they do is they say, here are the treasury that's called a QSIP. Here are the QSIPs that you can actually deliver, right? And then they say, they have a range, okay? So it turns out in the 10-year treasury here that the QSIPs that are actually available for delivery actually make the the duration, or whatever we call it, more like a 7-year treasury than it is a 10-year treasury, right? Okay. So what we actually have is we have ZF, which is a 5-year, and it's a pretty good 5-year. And then you've got ZN, which is supposed to be a 10-year, but is actually more like a 7-year. And then there is TN, which is the ultra 10-year, and that one is more of a true 10-year treasury, right? Like the maturities that are that you can deliver are closer to an actual 10-year, but there's not as many of them. So I don't think that you'll ever see TN have more liquidity than ZN, simply because there's more QSIPs in this one. That makes sense, okay? Then you got ZB, which is kind of maybe more like a 20-year bond. And then UB is like an actual true 30-year, okay? Now, here's what happens, is that if I'm the Federal Reserve and I go and I change interest rates up 25 basis points, okay? That essentially means that treasury is worth, let's see here, 1% would be 1,000, so 0.25 would be $250, something, right? So on a one year, $250, okay? But the 30-year, it's for a 30-year. So it's actually that basis point change times 30. is how much the value of it changes, right? There's also this thing which is like the things that the ZB reacts to compared to the 5-year are kind of different. The 30-year is going to be more sensitive to things that will change, like the long run, things that will, like, you know, still be affecting it 30 years from now, right? Whereas the 2 and the 5 are more sensitive to like short-term changes, like if we're falling into a recession, the Federal Reserve changing interest rates, these sorts of things, right? So you kind of get this weird dichotomy where there are certain things that the short-term treasuries will be more reactive to, and there are certain things where the ZB will be more reactive to them, but the ZB will also just overall change more because, you know, it's like a whip. Those changes in interest rates just, you know, get larger as they go down the curve. Okay. And so that's how they all relate. The way that I would set it up is, you know, I have ZB, ZN, ZF from left to right, right? I have the 30 on the left and the 5 on the right. These are the instruments that are based on price, not interest rate, okay? And I have them all next to each other. Then when I press this center button, they're all centered, right? And then I can see from there how they move. And so I might see that, you know, ZF moved up 2 ticks and these two didn't or barely moved, right? And so what is that? That's steepening in the yield curve. Steepening is up, right? So if you have them set in that correct, well, it's not correct, but in that order, okay, then up is steep, down is flat. And that will match what you get over here on my charts with my spread. Up is steep, down is flat. And then you can kind of, you know, once you learn more about the economics of it and everything, you can kind of try and game out why the yield curve might be moving and so forth. I'm seeing a lot of lead market maker activity today. What do you mean by lead market maker activity today? It does kind of, so what I'm seeing here in the 10-year in particular is the cumulative delta is flat, but they are like slowly levitating up. I'm seeing pretty similar in the 30-year, but the 5-year seems to be buying outright. So I suspect that there is a steepener trade going on right now. They're buying the 30, or sorry, they're buying the 5. At some point, they may turn around and sell the 10 and the 30. So we're gonna be careful for that. Do you see how the 30, since we reset things? Well, actually, they're all online, aren't they? Okay, there you go. Now the 5 is 1 tick higher than the 10, right? You're definitely gonna have to watch that multiple times to get it down. Yep. Well, it's one of those things. So I think this is the most important thing I can tell you in terms of like learning how to trade, is that your mind is a machine learning network, and the things that we're thinking about and the things that we are watching are the training data that you pass into that network. So I can give you a piece of information, you're gonna, you know, store it in the back of your mind. That's not necessarily gonna implement it in that machine learning network. How do you implement it in your machine learning network? By coming in every day and looking at it. And it will get to the point where I don't think about it. I just know up is steep, down is flat. There are these kinds of situations where we steep and where we're flat. Right now, we've been steepening. It's interesting that we were steepening when we were on the downside yesterday. We are steepening now that we are on the upside today. That's kind of a key thing to notice. But it's just like second nature to me, right? Because it's been built into that machine learning network over years and years and years. And so when you're trying to learn it, that's the way that I would approach it, right? Every day, come in, have the indicator in your chart. Are we steepening or flattening? Why might that be happening? It will ingrain into your brain. Otherwise, what you're trying to do is you're like trying to draw this chart like that people typically have, where these are yields and this is supposed to be a steep curve and this is supposed to be a flat curve, and like which part actually moved, and then you have to flip it around to correspond to actual prices instead of yields, and like that doesn't work, right? Just remember, up is steep, down is flat. Watch it every day. It'll become second nature. Okay, one thing I am seeing is that the Japanese yen is seeing a little bit of upside here. It's not perfectly correlated with the treasuries, but it is going up. So I think that our reading of the flows is still correct. Oh, interesting. We're at 4.6. The actual change hasn't been too much. I guess I might have been able to make $10 in there somewhere. But no, with the way that the volume is going, I don't really like it. So I don't think I see a trade, frankly. Okay, so let's see here. With all that, where were we? That's right, backtesting cash data. So the market order imbalance is not cash. Maybe I should add that to it. Maybe I should try and make that one. You know, I actually, for some reason, yes, I'm going to think about that. For some reason, some of these indicators, I never tried to create like what would you say, like a parent one? What kind of data loading problems do you get? It's basically the market order imbalance. It's using tick replay because it's not so dependent on the level 2. Because the tick replay still has that like best bid, best offer part, and that's what it uses to determine whether it's a buy or a sell. So. Struggles on the tick replay, it usually orders improperly and then I have to clear the old data and reload it. That's kind of weird. It usually opens improperly. Well, okay, so what you're saying is when you start NinjaTrader and the indicator loads up, what you see doesn't look right, and then you go and you press F5 and then it's okay, right? Well, it probably is the tick data loading. Like, it will probably take a little bit for it to show you anything because it has to go through everything, you know, all of the tick data on that, right? And so especially if you have like a 90-day chart on there or something like that, right? So this is the first thing, is that I wouldn't put that indicator on more than like 2 days of data or something like that, just to reduce the amount of time that it has to spend doing the tick replay when it loads up. It loads quick. Loads quick, it just doesn't look correct. Yeah, you say loads improperly, so we need to go into more detail about what loads improperly means. Sometimes even the price data is squiffy. Oh, really? So sometimes even your price chart doesn't look right, and then you refresh and you get better data. That's kind of weird. I wonder if it's because you have multiple data feeds, perhaps? Yeah, that probably is the data and not the indicator. No, just one. I don't know. Because, you know, there's all these settings in here if you go into the options about, like, market data, where you can tell it, like, preferred connections and all that sort of stuff. So you could have something where, like, you know, you have multiple connections. Like, there's the kinetic end of day data, for instance. I don't know. It's kind of weird. So it looks like they gave up that most recent rise higher. I haven't seen anything that suggests like liquidity hold to me yet. It still looks relatively free to move, but they are kind of getting to the point where you might start to see that sort of a thing materialize. I think that if we did, I would see it more in the 5-year, because again, that seems to be the one where the volume is coming in. The volume over in the 10-year and the 30-year seems inconsistent and kind of all over the place still. I think the reason that I didn't put the caching stuff into a separate class was because it would have to be, it would either be an indicator that you'd have to add and then like, oh, well, what's with why do you have this indicator? Or I would put it as an add-on. Oh, now that's interesting. So I'm looking at this is, I've never kind of messed with add-ons. So here's price swing action. Where is that indicator? I think it's Poncho, right? Using price action swing dot base. Yeah, those are his add-on. I see. So like with the way that I did it for the range histogram, you know, I would just have all of the drawing things, and I had like one really basic, I had the range histogram, and then you could just extend from that. I do kind of wonder if I'm making that too complicated. I'm having lots of thoughts here. One thought is that I can just forget about that and go to analyzing cache order flow data in Python. Because I have all this data and I'm just saving it to disk, and I could analyze all of that and do, you know, create everything in Python. That'd be like a totally different thing versus trying to get these to backtest. So the first thing is I don't think that I have any of those caching indicators on my chart right now. Oh wait, maybe, well, hold on. Oh, no, never mind. I don't cache cast bases either. Only the level 2 ones. So the ones that I'm most interested in backtesting, I'm not caching, but I probably should. Is there a way for me to make a indicator that is not actually an indicator? Like it won't show up because it's not complete. Let's look a little bit about what Ninja Trader thinks about indicators with inheritance. Maybe what I don't want, maybe it's not inheritance, maybe it's an interface that I need.
Block buy.
A big buy coming through at 14. So maybe we found our spot. Hmm. I'm thinking here about using inheritance, but I can't remember, like, I'm pretty sure that interfaces cannot implement classes, so then what do you do? Hmm. I see. What I should do is I should create a class called cache thing and have that define all of the stuff for how to cache, and then just have my indicators create that object. That's what I should do. And that would go in add-ons. What should I call it? Just call it cache. So that is something that I think I should do off stream. Yeah. You do that, implement it onto these other two classes, see if it backtests. There might be some problems with that because there's kind of this funkiness behind when you can get values and things like that because of multi-threading. And I think I had resolved that issue, but maybe I didn't. And maybe introducing this patch class makes it even more difficult. Right? So. Looks like they're coming all the way back here. I thought that they maybe had found their spot at 14, but 2 ticks down and back to the 13 area. ZN's still very much moving sideways. Wow, I sat and I thought about that for a long time. It's already been an hour. Man. So now all of a sudden I'm thinking about the Trump court case. let's go around. Are we gonna get any information about that today? I mean, it's impossible to know, but I don't think you'll get a verdict today. It could actually be a really long time before we get a verdict. Sometimes it can take weeks. Best to not think about Banana Republic. Well, it really is. We really are just like along for the ride, aren't we? There's nothing you can really do about it. There's nothing, you know, I think that one would have the thought that like, well, okay, after the verdict happens, what happens? And, you know, like, would people go and riot? And do we need to get ahead of that so that people don't riot because that would be bad for your party or whatever the deal is, right? But I don't know. You really can. There's a reason they don't televise it. I don't know if it has. I don't think it has to do with that. Every time that a court case has been televised, it becomes like a total circus and does not benefit the public, you know? But man, I tell you what, this so I kind of we knew that there was going to be at least one court case, right? And we knew that it was going to cause a lot of drama and all of those sorts of things. But I always still kind of thought that it's kind of going to be a sideshow. But then yesterday something happened, which was that the judge basically explicitly went along with the prosecution's that novel theory here that we can prosecute Trump for covering up a crime without proving the crime that he was trying to cover up is basically what happened. So they said, okay, if you think that he was trying to cover up crime 1, then you can say that, you know, he was covering up a crime. And if another juror thinks that crime 1 didn't happen and crime 2 did happen, you can also go say that it was guilty, right? So I think that there are some things in New York law that maybe makes that reasonable. I don't think that it would hold up on appeal at all. There's no chance that it holds up on appeal. But that's what the judge did. And you can go into the details all you want. But the higher level takeaway here is that the right is just fuming about this. Just absolutely fuming about it. And it's like a huge deal. And so all of the sudden it is now, you know, what I thought would maybe be a sideshow is like the only show. You know what I mean? And it's wild because it kind of seems to me, and when I see it like going this way, you know, like when I go through all of the scenarios and they all benefit one side, I'm always kind of like that. That doesn't seem right. That shouldn't be the case. But I keep going through it a million times, and I just don't see any world where this doesn't help Donald Trump. You know, like if they acquit him, or it's a mistrial, it's probably more likely to be a mistrial, right? Then, you know, that's a feather in his cap that like this really is a political prosecution. Of course, everybody already thinks that anyways, right? Which means that if they do throw him in jail, everybody will be upset because it was a political prosecution and they're putting the presidential candidate in jail to try and stop him from being president. I don't know. I don't know. Stuff could get super crazy in that scenario, like super crazy. And that's where I was saying again that like you might think, oh, I don't think that Republicans would riot or anything, because the thing is that then there would be appeals and we'd have to wait for the appeals and all this sort of stuff. But a huge deal, right? Huge deal. And then on top of that, Joe Biden is scheduled time to read his statement after it happens, and all of this sort of stuff is just, it's absolutely wild. It's absolutely wild. And at this point, we're just along for the ride. I don't know if you can really make accurate predictions off of this. I don't know if you could actually make money off of those predictions anyways. Is just a big mess, and we just get to sit around and watch what happens. And that to me is super unnerving, you know? It just makes me so uncomfortable thinking about that. I don't think that the prosecution proved their case very well. Like the linchpin here is, did he falsify records? And I don't think that they did. So, and I think that there's at least one person on the jury that's going to say that, yeah, it didn't work out that way. In fact, I saw stories the other day where they said there was one person that, you know, like they're watching his reactions and things, and he seems to identify with Trump's case. So I actually think that, so am I trying to make predictions? Because I'm just sitting here saying, like, I think we're just along for the ride, but I guess I can't help myself. I think that it will be a mistrial. I think that there will be one holdout and that they won't be able to convict him, and they'll declare a mistrial. There's 8 white women on the jury. That alone lost him the maybe. Okay, let's see. We'll make it an official prediction. My official prediction is that there will be at least one holdout and they'll declare a mistrial. I've already seen reports about that there's a guy that's probably will be a holdout, and because here's the thing, is like, I don't think that the jury selection was very fair. I don't think that the venue selection was very fair. I don't think that the judges' decisions have been fair. There is almost zero chance that any of this holds up on an appeal. I mean, this will be going to the Supreme Court, almost certainly, right? But the prosecution did such a terrible job, particularly basing like the premise of the entire case on Michael Cohen, and then Michael Cohen just being an absolute disaster on the stand. That's what's keeping Trump in this, you know? I remember an interview with a dismissed juror who said she couldn't be impartial as a Trump supporter, and I remember thinking, this is why y'all lose. Oh, yeah. I think that I could be impartial. I wasn't sitting there on the jury, but like what I've seen, I don't think that I would be able to convict them. Like, especially the whole thing about like it becomes a federal charge at this point because of X thing. That's just like such a wild legal theory and everything. I just can't imagine what these people are thinking. Like that putting Trump in jail in that manner is going to benefit them, right? I just can't imagine what they're thinking, man. Nah, I don't think that the judge's decisions have been very fair at all. And it really shows in the jury selection that the jury selection was like super biased. Like Uzi's like got it right there. Like if you were getting a fair one, then you would have 4 Democrats and 4 Republicans or something like that, right? But instead, they stacked the jury with all of the people that were like the most likely to convict Trump. Yeah. And on top of that, I really don't think that New York is an appropriate venue for this either. But they're prosecuting him under a New York statute, so I don't know if there's you could do it in a different city other than New York. Maybe you could prosecute him in Albany or something like that. Well, the defense was involved, but there was also many decisions. You know, I wish I could remember the specific ones that I'm thinking about. I can remember when I was reading through all of that process and some of the decisions that the judge made that was just like, this is a complete joke, right? And then there was that thing that like the same judge has been getting the other trials that are coming up. Like, really? Come on. That's crazy. That's so crazy. This is like, they're already upset about the way that this trial has gone and feel that this trial is unfair. And not, when I say they, I mean like 50% of the country. And then you're going to go and give the next one to the same judge? What? But again, they have to be unanimous. So I think that there was this thing, like some people maybe misunderstood some of this stuff that was coming out yesterday, right? Because there was this whole thing about like, there's 3 different crimes that Donald Trump could possibly be trying to cover up. And so they're saying that you don't have to determine which crime it was that he was covering up, only that he was covering up a crime, by that he was falsifying records and covering up a crime, right? But I don't think that the prosecution proved very well that he was falsifying records, nor did they prove very well that he was covering up a crime. And all you got to do is just have one person in there that says, no, he wasn't covering up a crime. No, he didn't falsify records, to just blow the whole case up. No, see, I this is where I think you're misunderstanding it, Paul. They have to be unanimous that he falsified records. They have to be unanimous that he was covering up a crime. They don't have to be unanimous on which crime it was that he was covering up. I don't understand how hush money. Yeah, well, so let me explain it. There's actually some interesting legal history behind this. So do you remember back, was this in 2016? I want to say that this was in 2016, or that it happened before 2016, but like in that election cycle. There was a Democrat presidential candidate who ended up dropping out. What was his name? I can't remember the one, but basically what happened was this guy had an affair, and then he paid money to cover up the affair. And then I think it was actually a Republican Department of Justice or something like that decided to try and prosecute him, saying it was a campaign contribution. And so like there's basically this novel theory that, you know, paying hush money to cover up a story is actually a campaign contribution. But you wouldn't do it unless you're doing it for the campaign. Yada, yada, yada. Okay. And they did this court case, right? And they acquitted him. So the thing is that, yeah, they weren't able to prosecute this particular politician on it, right? But some of the base legal theories for like even bringing that case to trial were accepted in that instance, essentially, right? And so that opened up the door then to prosecute Donald Trump about this. So it's the same thing. that they're saying, okay, you paid money
Walk by.
to somebody to cover up a story. Problem is, that's a campaign contribution. You said that it was a legal expense, but we say that it's a campaign contribution. So because it's a campaign contribution, that's falsifying records. So that's what they're prosecuting him for, okay? The falsifying records in New York. That alone, they can't throw him in jail on it, right? So what they are doing is they are further saying that they did it to cover up a crime. That paying that hush money was to cover up a crime, essentially, right? Now, if you falsify records to cover up a crime, now it's a felony and they can throw you in jail for it, right? So that's why this particular decision matters, is that the first they have to say falsifying records, which means accepting the premise that it was a campaign contribution and not a legal expense, which is dubious on it already, and is, whichever way that one went, likely to get appealed. Well, I don't know. If they say that it's not, then maybe that won't get appealed. But if they say that that is falsifying records, that alone, it probably gets appealed. Okay. But then there's this further reach, which is that he was trying to cover up a crime. Okay. And that you can prove that somebody was trying to cover up a crime without proving the actual underlying crime. This is another big stretch legal theory sort of a thing. And what has happened is the judge has basically accepted the prosecution's legal theory here, that we can prove that he was covering up a crime without proving what the crime actually was. Okay. That's going to get appealed. It just is. It's going to get appealed. If that jury comes back and prosecutes Donald Trump, immediate appeal, Supreme Court probably, expedite, picks it up, and it'd be a whole thing. And then they probably will say, yeah, actually, you if you're going to say that he was covering up a crime, you have to prove that there was an actual underlying crime. And you can't, right? So every New York City white lady is out against Trump. Well, yeah, I think that they really did pick up the people that were most likely to want to prosecute Trump. It really does feel like that. Just looking at the demographics and what we do know about the jury pool. So but what is a fantasy about it? Sorry, what about anything that I said is inaccurate? Look. Liberal white women from New York are the demographic in the country that are the most likely to be anti-Trump and prosecute him. Come on. When we prosecute your candidate, it's normal. When you try to investigate ours, it's an impeachable offense. The way that they were so cagey about that says to me that, yeah, the Democrats were kind of pulling shady stuff in Ukraine. Yeah. It also kind of makes me wonder. So, speculation, theory. If Hillary Clinton had won in 2016, would the Ukraine war have happened sooner? I kind of think that it would have. The Uzi thinks so. I don't know, it's just a theory, but because she was kind of saber rattling, in that campaign, wasn't she? That and Iran too, quite frankly. It was we need a new war, and these are the two that we could do, but we don't really want to do Iran, so let's have Ukraine. Yeah. And the Republicans weren't so in on that. So when Donald Trump came in, I guess Putin decided not to do anything. And then when it was a Democrat again, he was like, well, okay, fine, then we're going to move in. and I really think that Putin's calculus, that a major factor in his calculus was, it was a Democrat that won, so now I need to move into Ukraine. I really think it worked that way. Yeah, Ukraine started in 2014? Well, China better snap to it and take Taiwan just in case. You know what? I don't think China's actually going to do it. I totally agree with the argument that, like, China is a lot more likely to want to actually go into Taiwan based off of what has happened in Ukraine and Russia and all of that. But I think that the calculus is still that it would be such a terrible idea for them to do it, that they won't do it. I mean, on one hand, you can be like, oh, yeah, we can totally invade another country, and the Western powers will not, like, directly get involved. But the Western powers will give those people tons and tons of money and help them fight you tooth and nail, and you're going to lose a lot of people and a lot of money doing it. And then because it's Taiwan and so much semiconductor capacity goes on there, and certain special types of semiconductors are made there that you can't make anywhere else, that it would just be absolutely devastating to the world economy. I don't think that Taiwan would do it. They would need to lower the risk, essentially, for China to be able to justify going in. Like, they will just continue to bide their time and hope that the geopolitics go in the direction where it makes it more viable for them to invade Taiwan in the future. China will take Taiwan under a predictable counterpart like Biden won't do it under Trump. Well, but then they will. Well, I was going to say then maybe they would have done it already, but they haven't done it already because they don't really have the ability to take Taiwan under their current, like, you know, like they're still building up their navy and things like that. So. So, you know what? I have, like, barely even noticed that the S&P has been going for, like, almost 20 minutes. It's been, like, really tight. The Dems have declared Trump excommunicado. I mean, the real tell is, look at the moderates, right? All of the moderates think that the Trump trial is a sham. Like, kind of seems to me that Joe Biden is a terrible candidate, that all of his campaign strategies and kind of narratives to try and, like, improve his image and so on and so forth have been dismal failures. And so now they are throwing everything behind the Hail Mary, which is, if we throw Donald Trump in jail, that will prevent him from getting elected. That's what I think is going on at this point. I don't know how you prove that, but, like, I mean, come on. Everything is pointing in that. I don't think it would make sense to push this case in the manner that they're doing, unless it was like, you know, we got to tilt the scales here somehow, right? Yeah. Well, that just comes back to that the whole January 6th narrative that we've been sold as total bullshit, right? That it was like an uprising, and no, it wasn't. No, it wasn't. It was people have genuine reason to be skeptical about the election, because it was like they went to bed and Donald Trump was winning and they said, okay, you can go to bed because we're going to stop counting now and we'll start counting again in the morning. But then when you woke up, they said, actually, in the middle of the night, they started counting again and they found that Joe Biden won. What? And you expect everybody to just be like, okay. Nah, of course they're going to be pissed. Even if it was legit. Come on. Because for every election in our lives, we stayed up until like 10, 12 o'clock, depending on your time zone. And then you knew who won and you went to sleep. And this was the first time that you didn't. And then, so you go to sleep not knowing. And then in the middle of the night, you find out that they didn't do what they said they were going to do. They said, oh, we're going to stop counting for the night. And then they picked it back up in the middle of the night. What? That's what happened. Come on. That's what everybody saw. And whether it was like, okay for them to do that or not, and whether they was like election fraud, or it doesn't matter. People are going to be skeptical in that situation about what happens. Anyways, we're just along for the ride here, man. I don't think it's guaranteed that he's going to get prosecuted, but it's going to be a wild ride either way. I think the most telling thing about the election integrity issue is that you have so many Americans that are concerned about election integrity. And so instead of doing things to assuage their concerns about election integrity and pass more strict laws to ensure that there isn't any kind of election fraud, they do everything to weaken our election fraud measures and to just quiet down the dissent, right? Like if you're there's really no election fraud and there's really nothing to hide, why wouldn't you go, yeah, listen, if you're concerned about that, and you think that we could do this thing and that would reduce election fraud, then we can do those things. And they say no every time they have a stupid excuse. They're not actually arguing in good faith on the election integrity issue. They're not. They know that certain measures that would try to improve election integrity, whether it was stopping fraud or for some other reason, would reduce the number of votes that Democrats get, and that's all they care about. If we have voter ID, less people will vote for the Democrat. This is just the way that it is. Election integrity just means my candidate has to win. Well, I don't want to go too far off on the election integrity thing. It was just kind of a side thing. You're getting me distracted. The point was, it's not a given that they're going to convict Trump, but they might throw him in jail, and then it would be super crazy. And that seems like more of a possibility than ever. And it could happen at any moment. Heck, if they could come in and say, oh, we deliberated for an hour and now we're ready to read the verdict. Okay, so just be on your toes. You're going to be in positions. And it could be next week or the week after that. Like, they might be in deliberations for a long time, actually. So something crazy is going to happen soon, but the exact time we don't know. Oh, for sure. If illegal immigrants were more likely to vote Republican, then the Democrats would be saying, oh, actually it does happen. Yeah. They'd be the exact opposite, for sure. Like, you kind of have to look at incentives. Even if there really was 0 illegal immigrants that actually vote, okay, as the Democrats claim, if illegal immigrants voted Republican, Democrats would still be doing everything they can to prevent them from voting, because their incentive would be to prevent them from voting, right? You can just look at what benefits them the most, and that's what they're going to do, like, especially in politics, just because that's how strong and perverse the incentives are. You have to think like a psychopath. I will march from Vancouver to Washington if they put Trump behind bars. Oh man. Maybe it comes to that. I don't think it's going to be that crazy. Here's what I think. I think that if they prosecute Trump, I think that there will be like demonstrations and stuff, but that overall that it will get appealed so quickly that we'll just be stuck waiting for the Supreme Court judgment on it instead. Right? So I don't think that if they quote unquote put him behind bars this week, let's just say that they come back today and they say we prosecute him and he committed a felony and now we're going to put him behind bars, right? I don't think that there would be like riots and revolution per se. I mean, I think that there would be demonstrations. I think that it would get pretty heated, but I think that the majority of people would be waiting for the appeal at that point. Because I think some people think that if you put Trump behind bars and then there will be a huge rising and they'll like overthrow the government or something like that. I don't think it'll be like that. But my prediction is still hung jury. There will be one holdout. Because I can't imagine with that jury composition, them all unanimously saying he did not falsify records. There's going to be at least one, if not the majority of them, say that he falsified records, right? But to have a real jury verdict, it has to be unanimous, right? There's going to be one, so I think it's going to be the other way around. There's going to be one guy that will say no, the records were not falsified, and so they will declare a mistrial. That's what I think is most likely to happen. Today's treasuries are weak? I don't know. I mean, there's been some okay moves. It's not, for summer trading, it's not terrible. Certainly not as good as it was yesterday, though. Yesterday, they really moved. It was quite, they kind of kept going, too. So it's like those auctions were just terrible. Oh, man, that's something that we haven't talked about. Should we talk about that? So, for the past few quarters, the treasury auctions have kind of been a friction point in the market. Concerns that the market might not be able to absorb all of the supply that's coming out of the treasury. And Janet Yellen basically just kind of keeps like kicking the can down the road, like issuing less treasuries than the market is expecting, essentially. And so the thinking was, when they did the last quarterly refunding announcement, that that should kind of placate the market for a while, and that they should be fine, and that the treasury auctions shouldn't be a huge deal. So now here, when like nothing has changed or anything, and all of the sudden the treasury auctions are going super, super bad. 3 auctions in a row now, all bad. That's a problem, because when you get to the point where every auction is bad, that now you have like real funding crisis on your hands. Like, that's the sort of thing that drives us towards that, you know, shit hits the fan, the United States isn't able to finance its debt kind of like crisis points. And we thought, oh, we won't have to deal with that until after the election. And now these past few auctions, I think, have kind of put it back on the table. So something to keep an eye on. Say there was a 6K offer. I don't see it anymore. I did hear a couple of clicks, though. If Trump goes short DJT, oh, maybe that's not a bet. So if the jury comes out today and votes to convict, well, basically what you're saying is that Uzi should be short DJT, is what you're really saying, because seems very, very confident that they're going to convict him of a felony. If they convict him of a felony, short DJT. So it's not a terrible theory. What would be some things that would maybe put a wrench in that? And I'm kind of thinking more, less from the perspective of, you know, will he be wrong about that scenario? And more about what might make that stock not behave the way that we think it should in that situation, right? Well, there are already a lot of shorts on that stock. I think that there was a pretty good squeeze recently, but there's still a lot of shorts on them. Actually, let's pull up a chart and see how they've been doing, and maybe pull up Morningstar. GameStop is down in the overnight. So this was when they had completed their shares sale, and now they kind of seem to be settling back down there again. All right, well, DJT. We'll go to 1 day charts. They are kind of at the higher end of the range. So if Donald Trump was thrown in jail, let's take this a different direction. What if instead of DJT, we were trading like prediction futures, right? Will Donald Trump will be the president or Joe Biden will be the president? If Donald Trump is convicted, I would expect that there would probably be a lot of people that would place bets on that Joe Biden will win because of that. But I would then think that there would almost immediately be a pushback. And some people say that this like almost guarantees that Donald Trump will win now. So now you go back to DJT. Maybe you could see a similar thing, right? Like a knee-jerk reaction down, but then that retrace or something like that. Yeah. So I think it's a reasonable trade, but it would be one that I think you'd have to be really careful with, right? Like, if you're gonna take that bet, I wouldn't put money on it that you need. Let's say, it sounds like a risky bet to me. Have we begun? Oh yes, that already happened. So you got to remember that the first call happens 3 days before. I forget when it is. We're on you. And all of the liquidity is over in you now. So 3 days before first call. So like everybody should have been switched over by basically on Tuesday. close that. The S&P 500 seems to still be doing okay. Like, you know, there was that initial spike on the news that kind of like came back, but like the flows continue to be long over there, so maybe they'll continue to push up. We'll see. Oh yeah, so I forgot we had the housing data. How come I didn't hear that when the news squawk came through? I can still hear that. Okay, U.S. pending home sales change month over month, -7.7 versus -1. Okay, well, that would be a reason to move up. There's that 6K offer you were talking about at 15.5 is back. But it kind of looks like it wants to go higher, though, don't it? How hard is it getting Goldman these days? Well, I don't know. Like, it depends on where in Goldman you're going, right? If you want to be on a trading desk, you probably need an in, like you were an intern or you know somebody or that sort of a thing. Like, those are super competitive spots as I understand it. Same with like the quant desks, you know, but like technology for me, I don't know. I don't know if it was that big of a deal. It seems to look really good on your resume. Companies like it, but to me, it wasn't a huge deal. I don't know. Maybe I should go and try and get into like Google or Apple and see how I do on those, and maybe that'll humble me. I don't know. As I've gone along, though, I've preferred being in smaller and smaller companies just because then, you know, I'm actually doing real work and making a difference and owning things. Whereas when you get into these big companies, like a lot of the stuff that you're doing is just stupid BS busy work, right? Oh, yeah. Investment banking for those coming from, that's super competitive, right? I think another big one on those is that you would need to be going to the right school already. Like, I don't think that they hire for investment banking at the University of Utah. They hire for the back office at the University of Utah, but not for investment banking. Like, probably would want to be in an Ivy League school. This is a problem. I got to tell you, it was another one of those things where it's like, okay, here's the discussion that the society is having, but like, here's the thing that seems like super important and relevant here that I'm not hearing anybody say. So when you come into like this diversity, equity, inclusion sort of nonsense, right? Well, I don't like it, but I don't think it's entirely nonsense. And I'll tell you why. If I'm hiring for a role, if I'm hiring for a job, the way that it is right now, I put that job posting out and I'm going to get thousands of applicants. I'm going to get thousands of applicants. Okay, so we would say you should pick the person that is the most qualified. Should pick the person that's the most qualified. Well, so first of all, that means that the people that are the most qualified, based on what measures we can see when you're interviewing and looking at resumes, is kind of a certain group of people, and those group of people will just continue doing better and better and better and better. Okay, so let's assume that you do pick the best person. That doesn't mean that there are not 1,000 other people that would have wanted that job that probably could have done just as well. Which is to say, there are people that will do just as good at the job, but there's no way for you to know because the resume doesn't completely predict that, right? But then on top of that, you might get 100 resumes that are all still very highly qualified. And how do you pick between them? Right? So for any one individual role, there are tons of people that could have potentially have done that role. And the reality is, we want to have a meritocracy, but like the reality is that the true meritocracy that we want is not really possible because there's not enough information for us to correctly judge everybody's merit. Right? Why don't I ever see people talk about this? Why don't I ever see people talk about this? So what happens? You make a system, and all systems have the same problem, which is there will be some imperfection in the system that will lead to some degree of inequality. When you scale these systems up to the size of the whole country, then it results in inequality. I think it's so silly. All of these people, they're like, oh, well, all we need to do is we need to change this rule or this rule, and then everything will... No, it won't. You're changing the rules of the game. So it's going to be different inefficiencies in that system, but there's still going to be a group of people that benefit more from it than the other group of people, and those people will slowly benefit until they're at the top. But the problem that I have, biggest problem that I have with the US system is that the way that it's kind of set up is like there's like this narrow path, and if you deviate from that narrow path whatsoever, you're immediately punished. You're not giving people like leeway to live their lives and do different things. It's like, why can't a woman raise kids for 16 years or however, maybe 20 years, maybe they wait till they get to college, and then go back into the workforce and not be punished for it? But you do get punished for it because you don't have the work history, so you're not as qualified, right? But that doesn't mean that you should do this DEI stuff, because if you do this DEI stuff where you say, well, we're going to prioritize having, hiring people of color, well, now you're introducing a bias into a system that advantages one race over another race, and that, first of all, it's unconstitutional, and it just causes problems. So I don't really like the system that we have today, but I don't like the DEI solution. You guys rolled? Yes. So remember that first call is 3 days before the first trading day of the month. And if it falls not on a weekend. So basically you have to say 1, 2, 3. So first call was Wednesday, which means that everybody is going to switch over on Tuesday, which is what happened. Because first call is essentially Monday, but then you 3 days before, sorry, the first trading day of the month rather is Monday, and so first call is going to be 3 days before that, which will be Wednesday. And then everybody wants to have been switched over before first call, so that's why everybody started trading the new contract on Tuesday. Did I get that right? If I got that wrong, you can correct me. Sometimes, I forget the details of those rules, but I'm pretty sure those are the rules for the treasuries. For the S&P 500, it will be like really late actually this time. So it will be the 20th essentially. That's when you'd want 19th and 20th. Because on their expiration is the same as the options, so the third Friday. And since the first day of the month is a Saturday, you ended up with it rolling over later in the month than usual. Going for a break at 16. Did you lose much on the short? I am kind of starting to feel a little bit of anticipation on that they might bust 16. So like actually this is kind of an interesting one. I'm kind of noting something where like, you know, if you're just going on hard rules you might not understand. So we talk about these ranges where like you know, if we go back to here, for instance, nothing's really going on, and so they're just stuck here, right? So you get these liquidity holes. Here's a liquidity hole. We're likely to go nowhere. Okay, so I identify a liquidity hole by looking at the DOM, but, you know, after the fact, you will see it on the chart. So here is kind of like a little... Here, let me clear it up so you can see more clearly. Here's a little box right here. Is that a liquidity hole? I don't think so, because this whole time there's been this massive offer at 16, and you know the volume has been pretty iffy. So really what's going on here is there is resistance here at 16. There is well, and I don't even like to use the word resistance because resistance implies that like they will bounce there, but there is some supply there. There is some sell side supply there at 16 that they are having to work to be able to get through. Now, every time that there's a big offer like that, especially at the highs and everything, I always get excited because like that can pull and then they trade through it and you get momentum, and those are some of the most fun trades, right? And I love that trade. But this situation, it is a 50-50, actually. There is a lot of the time where they just kind of peter out and don't make it. Especially if I go and I place a trade in there, then they almost certainly won't break through it. So I'll save Octavius here and not take the trade so that he can get the breakout. What did you mention about women going back to work after minding children and getting penalized? Okay, so the reason that the feminist movement of today exists is because in the past, women would rely almost entirely on their husbands for their living. And so if something happened, like their husband died or they decided to get divorced, then that woman would be screwed. They would not have any real income to speak of, because if they have to go back into the workforce, they're not going to have that experience in that resume, and so they're not going to get paid as much, essentially. So the way that our system works is there's a straight and narrow path, and if you don't follow through that straight and narrow path every step of the way, you get penalized, and each step that you take off of it, you get penalized. And that straight and narrow path is essentially complete obedience to your corporate overlords and the college system, right? You have to graduate from high school with the best grades, go into the Ivy League school, and then immediately go into a top level corporate job and then work in that corporate job for every day for the rest of your life. And at any point that you deviate from that, you're punished. So if you are a woman, what most women that I know do, and like when you look at the statistics, they talk about like women are homemakers, they prefer to take care of children. That's just the statistics, okay? Most women would prefer to have children. They would. But so many women have seen what happened to the last generation when they got divorced and everything, that now they're like, but I have to have a career, right? So why is it that the solution to this problem is complete obedience to our corporate overlords? Oh, okay, we have this problem, so what we should do is we should also force women into the workforce and have to bow down to our corporate masters too. When that's not what most women want anyways, right? The problem would be solved if it was easier for women to get back into the workforce after being out of it for a while. Because if you have a gap in your resume, they throw the resume in the trash, right? There are some companies, one of the things that Goldman did is they would have like a returnships, which is like they would have a program where they would specifically hire women that have not been in the workforce for 10 or more years. You know, like that's a program. Kind of helps. How do you solve the problem? I'm not exactly sure, but it's just that's like one of the things that happens in our system, and like you can kind of see the results. It's kind of a mess, right? Because it's like you can go down the traditional route and hope that you don't get divorced, or you can bow down to our corporate masters. And a lot of people are women are choosing to bow down to the corporate masters. I understand it, but that's not really what most of them want. At least from the surveys and statistics I've read. That's what that was about. But when I talk about these sorts of things, really the thing that I'm trying to teach you is the problem with systems is systems, right? The very rules of the game will lead to certain optimal strategies and outcomes. And when a system scales up to the size of an entire country, that results in very strong outcomes that are a problem. And so people's solution is always like, oh, well, we need to fix the system. Well, we should change the system, yes. But some of these things are like, there's always going to be something unavoidable about it. And we kind of have to go back and like, make little tweaks and stuff here and there and use our discretion to get optimal outcomes. Think about it like this. Let me try and present it from a religious perspective instead, okay? So I know not everybody will be into this because maybe you're not religious, but I think even if you're not religious, I think you'll understand what I'm saying here, okay? There's this concept of God as a watchmaker, which is that, yes, there was a God. He went and he created the universe and it's incredibly intricate and all of these sorts of things. But then once he set everything the way that he wants it, everything from there, he knows everything that's going to happen. And so he doesn't have to do anything after that point. So it's like he made this intricate watch, and then all you do is you just watch and appreciate that thing that you created. That's the idea of God as a watchmaker. Christians do not believe in the idea of God as a watchmaker. Christians believe that God explicitly intervenes in the affairs of man on a regular basis, right? That he called prophets and, Christ himself came onto the earth, but even more so than that miracles occur and all, and there's the function of the church and all of this sort of a thing. So they don't believe in God as a watchmaker. So if we take that Christian philosophy and we just assume that it is true, how do you justify that logically? If God is so perfect, why would he need to regularly intervene in the system that he's created? He's created a watch, but he's regularly winding it and cleaning it and doing things to it. Right? I say that is the nature of the universe. That God is perfect, but he is still bound by the laws of the universe. And in any system, there are going to be certain kind of statistical things that are undesirable, and that it's basically impossible to make a perfect system. And so what you have to do is you have to, in some instances, just accept those imperfections, and in some instances, intervene manually so that the thing that you need to happen still happens, despite the inefficiency in the system, right? That's why I talk about those things so much. Because that sort of thing comes up very, very much so in trading, in finance, right? You're going to have some system, you have this discretionary system and whatever, and it's pretty much inevitable that at some point your system is going to blow up. Like, that's the nature of the market. So the market figures out what people are doing and then adjusts based off of that. So any kind of systematic strategy that becomes popular enough, the edge in it will disappear, if not just completely blow up. So that means that at some point, if you have a system like that, you're going to have to look at the situation and recognize that it's not good for your strategy and say, I'm just not going to trade this one, right? You have to survive, right? That's why we talk about it. So really, ultimately, it's about systems and market microstructure. Or let's just say microstructure, the study of microstructure in general, right? And let's see here. There's some meme about feminism that goes something like anti-patriarchy, anti-men, anti-being slaves to me, anti-being dependent on men. And then they go and become a literal 9-to-5 slave for, yeah. But, look, I don't think that all feminists are completely ignorant of that irony, right? I think that they are simply pursuing what they feel is in their best interests, even though the options available to them are not optimal, right? I guess the optimal solution would be all mothers are paid a stipend by the government that's a ridiculous amount of money so that, if they can do whatever they want. I guess, but I don't think that would go very well, right? That would be inflationary, but still, it would be best. The best thing would be that we can all just get along and get really good at having relationships so that there are less divorces and men and women can have traditional relationships and be happy with them. That would probably be the optimal situation. I don't know if that's possible anymore, but that seems like that would be the optimal solution to me. Here, somebody is talking about in Discord about the refinancing and so forth. Hmm. Trump and Musk discussing advisory role in next administration. Yeah, I read about that last night. That kind of sounds weird to me. You know what I find interesting about Elon Musk? I read this quote from Elon Musk that said that if we are not failing 20 to 30% of the time, we're not taking enough risk. I think that when he was saying that, I think he was referring specifically to SpaceX. That it was like they expect 30% of their launches to fail. And if they aren't failing, then they're not pushing themselves hard enough to make jumps and leaps and stuff. Like SpaceX has been able to progress faster than, like, say, things happened under NASA because they're willing to make those mistakes, right? They'll go faster at the cost of a rocket will blow up, essentially, right? So when you think about that you will fail 30% of the time, that seems super high to me, you know? Like, Elon Musk at his core is a risk taker. And his approach to it is like, yeah, I don't know everything. There's probably a lot of decisions that I make or ventures that I decide to put money into that if I really understood them are just absolutely stupid. But I don't have the time to look at all of that. So I'm just going to take the risks in the places where the opportunities are most likely to lie and accept that 30% of them are going to fail. That's Elon Musk's approach, right? Well, it seems to me that if you are trying to make it or whatever, like you are an entrepreneur or whatever the deal is, that kind of approach makes a lot of sense. That's how you can become a successful entrepreneur. But it also seems to me that there's a certain point at which you have enough success and enough people are reliant upon you where taking that kind of a risk is no longer appropriate. And I kind of feel like that Elon Musk has passed that, point a long time ago and just continues to take crazy risks when he really shouldn't, when he really has the resources and so forth to do things right and not waste money on stupid ideas. Just seems to me. And so now you want to go and take that attitude and put it in a new Republican administration with a president that's already kind of takes too many risks. I don't know if that's going to go well or not. Maybe the risks that they take are good and it ends up benefiting us a lot, but it makes me awfully nervous. I think I'm a little more risk adverse than maybe would be optimal for a trader, Well, let's see here. We still got 30 minutes left. It's been a decent, the action here hasn't been too great, but I feel like that for a stream, it hasn't been terrible. We've had a few things to discuss, some good questions, some good discussions. And the market, it's not like flat. It's just kind of, I'm not really a fan of it. I'm not really a fan of the flows that I'm seeing. That's okay. It's summer. So I don't really, expect to take trades most days. Mo Godat says ChatGPT has an IQ of 155 and a memory capacity that exceeds all of history, and in 2024 we will see AI solutions to deep reasoning and complex math. Okay. Let's see it. Because right now ChatGPT is kind of a thorn in my side. I tried the other day, I was doing this thing with non-farms data. And I was like, okay, I want all of the non-farms in there. I can copy and paste it, but it puts these rows in here that I don't need. So I have to go through and like delete the rows that I don't need by hand. So I was like, oh, no, wait, I bet you ChatGPT can do this. So I explained to ChatGPT how to do it. And like what it spit back out to me was like completely stupid. No. Probably I could have put some more work in it and like trained it and gotten it to do what I wanted. But it was faster for me to just go and do it by hand. Figure out the keystrokes and do it real fast. And it only took me a minute. So. Wait, what? Come on, break. What? Oh, yeah, you're still waiting for it to bust 16. The thing is that like, if I had been seeing the cumulative delta consistently rising, then I would be, you know, maybe I would be more like, ah, yeah, they could totally bust. But they seem to be struggling with this spot. Like my thinking is, let's just say that I was long 15.5 and I got the break. I think that immediately after the break that I would probably take the profit. Like, I don't know. I kind of think that if we do get a break, that it's likely to like be like a false break. You know what I mean? Just because they've struggled with this one price, and then to get through 16.5, 17, 17.5, they're probably going to have to trade all 4,000 contracts too. Uzi thinks it's not going to break. Yeah. Well, you know, I'm just all hypothetical, right? In this situation, from the time that I was like forward testing it, which was like a period of what, 3 months? So not super conclusive, but it was a 50-50. So I don't know. Sure does seem like as of late that they've been more likely to break than not, though, doesn't it? Like let's say in 2024, it seems like in that situation they've been more likely to break than not. I can remember. Oh, there's Lucas. How you doing? I bet Lucas can probably remember these situations when we were doing that, where like I always wanted to see the break, and there was like this period, and maybe it was a summer, but there was a period where like it just failed every single effing time, and it was so frustrating. Okay, why do counterfeit shares exist in the stock market? Let me explain this. So here's how things work: is you got traders, right? Traders. I wish that traders and traitors didn't sound so similar to each other when I'm talking. Okay, but you get the guys on the desk, and somebody calls the guy up on the desk and they say, hey, I want to go short X thousand shares of GameStop. And they go, okay, I'll sell you X thousand shares of GameStop. Okay. They don't go and look in the system and say, well, hold on a second, let me see if I have enough shares to do that, etc. No. He wants the sale. He makes money, he makes a commission on carrying out that transaction for them, right? They just say, okay, you sell us those, and then I'm going to go around and I'm going to go to the market to find them, essentially, right? So they make the trade, they do their stuff, right? And then the back office gets it. And the back office might look at the numbers and say, oh, hey, wait, you guys sold this many contracts, but you weren't able to go out to the market and actually sell and like actually acquire those shares to be able to sell them short for this guy, right? So at that point, this is what the back office does. And within a certain period of time, they have to go and find the shares and like reconcile everything, right? Okay, so you go back to the thing that we were talking about systems earlier, right? There's imperfections in all systems, and the way that you deal with that is that sometimes it just requires manual intervention. And you will see that literally everywhere in our modern financial system. That's why there's a back office. That's the whole job of the back office, is to reconcile those kinds of little discrepancies and stuff, right? And so it can result in a temporary situation where there are more shares short than there should be, let's say. I'm not even going to say like more shares than exist, but more shares short than they should be able to have because they didn't actually borrow the shares. Okay. The back office isn't going to let that situation last for very long. Okay. The thing that the GameStop conspiracy theorists are saying is absolutely bonkers. You're saying that all of the prime brokers have, been overly short GameStop for like 2 years now or something like that. And nobody in the back office ever said anything, went to the media, did anything about it. And they're still just like crazy short. No, like it doesn't work that way. When I worked for the bank, I could see the position of every client. If I still worked there, I would be able to go in and say GameStop and see the position of every client. Tell you how many were short and not short and whatnot. Like, that was the whole system, is it updated that information every 10 times every second. Like, so we knew what it was. So like if there was somebody who was short, like we would know it and somebody would be working on fixing it. Right? So that's how, like, quote unquote counterfeit shares can exist, but it is not a problem in the way that the GameStop conspiracy theorists claim. Yes. Did you really have access to this? Yes. That was like the thing that I worked on. It was a computer system. It calculated 10 times per second the complete position, at least in stocks, of every client. And I could go in and I could see the total credit usage of each client. Like there was one page that showed you the credit, like all clients, and then a list of, a column with their credit usage. Then I had another one that would be like, here's the client and here's all their positions. And there was another page that was, here is a specific stock. Here's all the clients that have positions in that. And that was for a good 9 months or something. That was the system I worked on. The Forex brokers usually give away their client positioning for free. Well, the only reason that this system existed was to enforce position limits, right? So it's like if you come into the treasuries, right, and you have so much margin, and then you try and take on an additional contract that would be more margin than you have available, then what prevents you from doing that? Does the exchange know? The exchange doesn't know. Your broker is the one that says, oh, wait, here's like your current positions and everything, yada, yada, yada. you don't have enough money for another contract, right? So how do they do that? They have a system just like the one that I was talking about that is calculating your net profit and loss and positions 10 times every second, so that if you go in and you submit an order that, you know, they should reject, the system goes, no, you don't have enough, and then it would reject that order. And that's how those orders get rejected. This is a system exactly like the one that I'm talking about at the big bank. What does it measure precisely? Like all of your positions. Like this is literally all of your positions. Right? So again, there was a page that was your total credit usage. That was like the ultimate thing, right? Is that you're given a certain amount of credit to use to buy and sell things at the bank, right? You can't go over that number. So if you try to do something and you're already to that number, it will stop you. Okay. But there was also limits on like a per stock basis and so. Oh, you're talking about something else. You made some claims about creating a market order imbalance or indicator that accurately predicts inflection points. Sure. We don't claim it makes predictions. We're evaluating it. Yeah. Well, so here's the history of this indicator. Okay. When I was creating my robots, the robot that showed the most promise was my very, very short time frame one that was using the market order imbalance primarily as its signal to do things. Okay. It was like the best performing in backtest. But the problem is that to do a backtest, I'm doing it on tick replay data. So I can only go back a year. And when I'm doing it on seconds, like teeny tiny little differences in the tick replay can kind of, make it inaccurate. So it did not perform the way in live, the way that my backtest did. Okay. So that's why we said, okay, we need to collect data and do a different way of doing this so that we can get an accurate backtest. And we're kind of to the point where we should be doing that, and I'm not, and I've got to work, off stream and do those things. Okay. But, it's been long enough, and I felt good enough about the indicator, and that like it wasn't like some huge deep secret that I wanted to keep, that I made the indicator. It failed. And so now Uzi has been using it. It's like the most recent download. That's what it has. Okay. Oh, there's Throne Room. Did you miss that? So, well, it's probably too late to do anything because we're going to be shutting down here soon. I kind of picked up a little bit, but I didn't go into that. I think you might be able to get further on it without me than you might think. Because really all you got to do is, like, I gave you the thing that does the socket. So now all you got to do is say, okay, here's a message that is submit a market order. Here's a message that is submit a market sell, right? And then on the NinjaTrader side, go and say, when I receive this message, and then go and find the unmanaged the unmanaged approach order management methods that should be called. And but yeah, I think you can figure it out. Yes. So hold on, New Squawk is talking in my ear. Let's load up a chart while he's talking. Market order imbalance period 10, and it's not going to show anything because I don't have tick replay turned on. Turn on tick replay, and now we should get something. There we go. Okay, so how is it different from market delta? So the most terse, short way of me describing it is cumulative delta with a rolling window, right? So, but actually it's a little bit more than that. So basically it's a rolling window. It's telling me over the last 10 minutes, how many market buys were there, how many market sells were there, and what is the percentage of market buys to market sells. So this is basically an indicator that tells me the percentage of market buys in the last 10 minutes. Okay. So when we get to 0.6, that means 60% of all market orders over the last 10 minutes have been market buys. That's what it means. That's all it's telling you. Okay. So it seems like there's a little nuance to it, but it's actually a pretty straightforward thing, right? Now, how we use that appropriately is kind of the open question. Yeah. It's another way of looking at market buy orders to say, you know what? Like it's gone too far. Like typically what you're going to find, let's add something in here. Drawing tools, horizontal line, change the line, and make it 0.5. So the first thing is that if we're in a meta order to the long side, then I should expect this order imbalance to pretty persistently stay above the 50% line. Right? But sometimes you'll get a really big deviation, like here in this place where during this period from right here, so like right here, right? It was very much biased to the downside. So probably what happened there is there was a bit iceberg that I missed, yeah. Put another one on it for 30 minutes? Okay. Market order imbalance. He says that I should add it to 30. I'll do the same thing over here where I add a little line so we can kind of judge it a little bit better. Interesting. It's doing a good job indicating that today's flow is yeah, it really is. You know, like it's just kind of like back and forth and kind of telling you that there isn't really a strong imbalance either way. I think so. Let's see here. I do have yesterday's loaded though, right? So we should be able to see that. Okay, so here's a great example. The beginning of the session yesterday, the flows were to the upside. And my judgment was that the predictors said that the flows were going to be to the short side. And that was correct. So based on this indicator, where might some of the best places to get in at? Well, right here, it's showing a pretty decent imbalance to the buy side around here. So somewhere in this area would have been great for you to go short. And it did end up being an amazing spot to go short. You can also see right here where the imbalance goes a little bit too far to the downside. It's a little bit too far to the downside. And so what happened? There was a temporary pushback, right? So then you could have waited again for that, that imbalance. So here again is a pretty significant imbalance to the upside. And then what happened? That was the start of the next down move, right? So that's kind of like our general theory about it. So some of what we see in the indicator very much matches what we expect to see based on theories or you know, studies and information that we already know to be pretty, you know, well-supported theories. Let's put it that way. I'm not going to say that it's perfectly true because our understanding is always imperfect. Okay, but stylized behaviors that we know to exist. So one of the stylized behaviors that we know to exist is that imbalances tend to be persistent. That if there's an imbalance between buys and sells, that you come back an hour later, you'll still see that imbalance. And so what we should expect to see is this indicator spending a lot of time below 50, right? Which is generally what you see, at least on the 30-minute window, right? But then there can also be places where they go too far and you'll get temporary pushback. So seems to fit with what we think should happen. But can we actually turn it into a systematic strategy that's really, really effective? It remains to be seen. Like, it showed some promise in backtesting. It did not match. The live did not match. Part of that could be, you know, there's these little inaccuracies in there, and then I'm like curve fitting onto those inaccuracies. And yeah, you know, so if I get something that's more, that's like a better backtest, then maybe I can work it out. So if you're looking back, so in this example, how much time do you give your indicator to be below that line for you to go out and decide to sell it? Well, so I don't know. So if I were to like game this out and say, if we cross the 50% line, go short, that would probably result in like way too many trades, right? And especially when you get things like that, that'll really kind of screw you over. So I don't think that would be a very good way to do the strategy. When I was backtesting it, the way that I was doing it is I was saying, you know, if it gets to like 0.7, then I go short. And if it gets to 0.3, then I go long, right? But with a larger filter, right? Some larger filter that would say, we're on a downtrend, so I'm only going to take this short, right? So that's what I was trying to do. Uzi's seen a couple of things about it where it's kind of been like, when you get into really big extremes, it does seem like that it's almost inevitable that you'll see a temporary little bit of pushback from it. So I don't know. Like, one of the things that I think is really weird or interesting about trading, I guess, is when I'm looking at like short time frames, is that you might have something for entries and exit signals that seems really, really effective and maybe even has some like real proof behind a statistical aberration in it, and it's still not be an actual profitable strategy. So another way of looking at value, well, I mean, I really hate the word value because the word value implies that there's some sort of price that is like a real fair price at that time that the market should move towards. And that's just not the way that the market actually works, right? But what we could say is there seems to be a degree of imbalance that the market really hates. And that if you stay at that level of imbalance for too long, you will see a counterflow come in. So no, but that's the thing, is that, I mean, there's two sides to it. Number one, does value exist? I would argue that value only exists theoretically. That value is different from each person, and that there's no like truly objective way to value an asset. Otherwise, there wouldn't be a market. But then the second thing is even if there was a theoretical value, there's no reason that the market is not forced to go to that value. The market is a function of the buys and sells that go into it, and many of the buys and sells have absolutely nothing to do with what those traders' perception of value is. Some of it is that they need to rebalance, etc., etc., etc. So you can't look at it as some magical level that they're going to go to because that's the right price. That's the wrong way to think of it. Right? There are liquidity holes that they might fall into. Those have nothing to do with like what the value of the price is. It's just, it's an area of low latent liquidity that kind of sucks them in. You know? Nah, I don't even, like, you say that value is temporary, but I say no. Like, there at any time, a large meta order can come in and we'll move it. And if that large meta order is a buy, it's going to move up, and it doesn't matter where your value is or how long it's been there or anything of the sort. So you really have to think of the market as predicting the orders. If the next set of orders is going to be buy, then it's probably going to go up, and if the next set of orders are going to be sell, it's probably going to go down. And there's always an equal number of buyers and sellers, but one side is more aggressive. And so that interaction of those aggressive market orders against the limit orders is what determines where we move. And that's it. And just like, if there's anything that is value, it is what this asset should be valued at relative to another asset. And that's the only kind of form of value that I think is useful in trading at all. Anyways, it's time to quit now. Actually, so we put all that. I'll try and get some of the caching in here and put the caching into that indicator particular. I don't think that the difference between live and tick replay on this would be so big, but when I was doing it on like 5-second charts, and it was enough to screw the strategy up. So, we'll do that. We can start collecting data. I can use the data that I've saved to go and get the correct data series and then save that in the cache so that it can load it, and we can do back testing on that. And then maybe we would have a more accurate way of testing the strategy. So that's maybe maybe for next week. We'll see. Maybe I find time today to do it. But in the meantime, stay excellent, team.